actually the monopolies, even if they are 1%, there's 50,000 listed businesses around the planet. So even at 1%, you would have 500 of these, awesome businesses. So actually identifying awesome businesses is not a problem. There are many, many great businesses around. Okay. I mean, Amazon's a great business and Alphabet's a great business and Microsoft's a great business. And what the Patels have done has been a great business. So actually great businesses all around us. And it's also not that hard to be able to tell that a business is great. And that's another point that Peter Thiel makes in his talk. He says that the monopolists go through extreme lengths to convince you that they are not a monopoly, that they exist in very competitive spaces, because they know that if they are a monopoly and they beat their chest about it, they will attract unwanted attention. I mean, like Facebook doesn't really want the US government to think it's a monopoly. And Google really doesn't want anyone to think it's a monopoly. So the monopolists try really hard to convince us, oh, poor me, I'm not a monopoly. Okay. And the loser 99% of competitive businesses go through extreme lengths to convince you that they are a monopoly. They try to convince you that I got the secret sauce. Look at me, I'm awesome. Okay. So the monopolists basically are telling you, I'm just Joe Public, man. I got nothing going on. Don't look here. Go keep walking. And the competitive ones are beating their chest saying, no, come to me. I have this awesome business. And let me tell you why it's so awesome, right? But I think that for an investor to figure out whether a business is great or not, and whether it's a monopoly or not, is a relatively simple exercise. Not that hard to do. Because I think a simple thing you can do is if you make a list of all the products and services and places that you shop at, okay, you will find the overwhelming number of those are monopolies. Okay, so, do you use an iPhone? Guess what? It's a monopoly. Okay, do you shop at Amazon? Okay, and who sends you your utility bill? They're all monopolies. Okay, so identifying monopolies is relatively easy. You can identify them by looking at companies that you're really familiar with, that you're a customer of, a client or whatever. The other way you can get to understanding a monopoly is looking at the numbers. Their financials will scream out and tell you, I'm a monopoly, even when they just want you to go away and not look at them. So it's not about finding great businesses. It's easy to find great businesses. It's about finding great investments. And the two are different. So once we identify that a business is great, that's awesome. We can collect a list of those. And then we have to go to the next level, which is try to find ones which somehow the market has not figured out. And somehow there's an aberration where the price does not reflect the great underlying economics. And then you're off to the races. Hallelujah. It's great. So that's what the game's all about. It's easy to sift the great from the not so great. But then the second piece, which is it a good investment from that subset list? That becomes a little bit harder. But as my guru and mentor behind me, Charlie Munger, likes to say, why should it be easy to get rich? Humans vacillate between fear and greed. As long as there are humans making investment decisions, we will have mispricing of securities. And the mispricing can be in both directions. They can be ridiculously overvalued and they can be ridiculously undervalued. So from time to time, humans get very euphoric and they get really excited about certain assets and classes and such. And, they get overheated. And many times things are not of interest. So I would say that if one is a bargain hunter looking for great businesses that are underpriced, there's always a set of them somewhere that fit the criteria. The problem is that the ones that fit the criteria aren't the easiest ones to invest in or to actually even convince yourself. So for example, in 2019, I made an investment in a company in Turkey. When I was looking at Turkey, I found, and even now I find Turkey is one of the cheapest markets in the world. And the reason it's cheap is because everyone and their brother just wants to exit. They just do not find it comfortable being there with Erdogan and company. And they just don't want to be there. And if everyone is rushing to the exits, the odds are pretty good that you might find a bargain or two. And so, for example, in 2019, I found this really incredible monopoly business. Peter Thiel would be proud, where Reysas, this company in Turkey I invested in, they had 12 million square feet of prime warehouses. They have a bunch of other businesses too, but they had 12 million square feet of prime warehouses, 99% leased to Amazon, IKEA, Carrefour, just top brand, 10-year leases, inflation indexed, rent adjusted every year. And the market cap of the company was $20 million. And the debt the business had was less than 200 million. Okay. So if you take the entire 220 million, whatever, 220, 230 million, whatever, let's say it's 240 million. Let's make the math easy. Okay. 12 million square feet. It's $20 a square foot. Okay. Anyone would be willing to buy those 12 million square feet in about 5 minutes from them for around $75 or $80 a square foot. Like the deal would just happen like that. Okay. These are very prime properties with class A tenants with pristine credits. Okay. And so if you sold this 12 million square feet, you would end up with like $1 billion. Okay. And then you pay off the 200 million and you'd have what, 800 million. And the market cap was 20 million. Hallelujah. And then we come to the pesky issue of rampant inflation and rampant devaluation of the lira. And I looked at it and said, this is a complete non-event. Because if inflation goes up, then cement prices go up, land prices go up, the replacement cost of those warehouses goes up. So instead of $80 a foot, they'd be at $120 a foot. Okay. So who cares about the inflation? Bring it on. Okay. And if the lira weakens, implicitly what is happening is that the properties would appreciate in lira, but in dollars, they would stay similar. This was the theory I had. Okay. That one is I was buying at like 4% of liquidation value. I was buying $1 for 4 cents. Okay. Nobody was interested. Okay. I thought I wouldn't get much stock. The rush to the exits was so intense that I ended up owning a third of the company. Well done, Monish. Well done. I think I outdid even the Patels. I don't think the Patels ever picked up a property for 4 cents on the dollar. And my last name isn't even Patel. Okay. So now fast forward 2 years. The lira went from 4 and change to 9 and change. In dollars, my investment is up 6x. In dollars. In lira, it's up 10x. Who cares about that? That's irrelevant. But in dollars, we're up 6x. Okay. And basically, even at 6x, we are still undervalued. We've only gone to 24 cents on the dollar, from 4 cents to 24 cents. Still have another 4x to get. And the company is not sitting idle. In the last 2 years, they raised the intrinsic value of the business because they did a bunch of smart things. They put solar panels on all their rooftops. They're now going to be generating like 50 megawatts of power with Turkey's new net metering laws, which they sell to the government at the same price that the government sells electricity. And solar panel prices have dropped like crazy. And Turkey has no fossil fuels. So their electricity prices are indexed to oil. And so those prices keep going up. They've already spent the money on the panels and they keep getting more money. So the value of the business went up, I think, another 200 million in the last 2 years on a 20 million market cap. Okay. So we don't need to be very smart. We don't need high IQs. We don't need high grades from Oxford. We just need to have basic common sense. That's it.